What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be talking about in this update is some of the data that I've been looking at over this weekend that we have not seen trend in this direction or even this aggressive of a trajectory in about a year's time. You can look at it as a year or even a 6-month time frame, but the implications of this data moving in this direction is so incredibly bullish that I thought I needed to share this with a lot of you guys. And what this data also gives us is kind of an explanation as to why we've seen the prices of AMC and GameStop and a couple of these other stocks heavily trending in the downward direction. But again, guys, there is a light at the end of the tunnel, in my opinion. These shorts are continuously screwing themselves over by taking out so many shares on loan, just even according to the reported data, selling them into the open market. And guess who's buying them? We are. And honestly, I think the core group of apes right now don't have any plans on selling anytime soon. And again, apes are not leaving. And the other thing that I really want to bring up is we know that the prices of these stocks are heavily manipulated on the dark pools, on all of these other different off-exchange venues, and what we're seeing on the actual exchange numbers. But the fact remains that just because the prices of these stocks are going down does not mean that the shorts are right at all. You have to look at this from a little bit of a broader perspective in order to see the big picture, which is what I'm going to try to get across to you guys in this update. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So the two things that we really need to understand before we kind of get into the bulk of this video, the first thing is that these two stocks, mainly AMC and GME, move together. That is going to come into effect a little bit later, but let's just take a look at some of the more aggressive moves that AMC has had over the last couple of days. Now, yes, we have been on a downtrend, but I want to bring you guys back to January 6th in the after hours trading period. So we saw that weird Wall Street Journal article start to come out, and a lot of people were speculating that a lot of those failure to delivers on GameStop were starting to get closed out. We saw GameStop rip, we saw Bed Bath & Beyond rip, and we saw AMC go up to a height of about green in the 16-17% range in that after hours trading period. So we've seen this many times in the past, last January, last June, which is going to be very important coming up later, that these stocks move together. The other thing that we need to understand is that due to the continuous net settlement system that the NSCC offers, every single trade is going to go through, and they kind of figure out how to basically locate shares after. So what that means is that every single time a hedge fund goes to take out a short position, almost always they are going to be paying that cost to borrow. So the two main things that we need to think about here going off of that is, one, remember these stocks move together and those trades are always going to go through. So when we come over to AMC's Ortex data over here, we can see that right now we have a utilization of 75%, an estimated short interest of 16.26%, but a very low cost to borrow. Now, when we come over to the option chain for AMC, I do kind of want to bring this up again. We have 630,000 contracts out of the money, 87,000 contracts in the money going into next week, and there's still a lot of action on the put side as well. So we're going to have to wait and see what happens with that. But I want to show you guys what happened in last June for AMC. We had 99% utilization, and we had a very high cost to borrow, meaning that when this cost to borrow number starts to go up, the shorts are paying a wild multiple more than they were paying before in order to hold onto their position. Now, due to the institutions essentially buying a lot of shares, maybe from retail investors or on the open market, for specifically AMC, they are able to essentially say that they are willing to lend more shares. Those shares aren't going out on loan. The utilization's lower. The cost to borrow is lower, putting less pressure on the shorts directly on AMC. But remember, a lot of these stocks move together, and there's a lot of kind of, quote, teamwork going on with a lot of these stocks. Now, what I want to bring you guys to is GameStop's Ortex data. Now, this is not something that we have seen in about a year. When you look at utilization for GameStop right here, you are seeing it massively skyrocket. Now, we started to see something similar on AMC too. It is starting to trend in the right direction, but not as much as GameStop's is right now. We're seeing 84% utilization and an inflection point in the cost to borrow right here. The other thing that I want to point out, remember, we were talking about the continuous net settlement system where they guarantee every single trade and they try to figure out how to locate the shares after. We can see failure to delivers, 62,000 right here. Then we see 87,000 right here. Then it drops to 8,000 right here. Well, that's right at the bottom where they start taking out a lot of shares. And then the failure to deliver start to happen. When you see the basically volume in the securities lending market start to pick up, you are going to see more failures to delivers due to that net settlement system. So bringing this back to what we saw back in June for AMC, AMC was kind of the deciding factor in a lot of these stocks running up. When we saw back in June, let's put this on a daily chart, AMC went from a price in the $10 range all the way up to 72. But what did GameStop do? When we come over here to GME, well, we saw GameStop in this similar time frame go from 155-ish all the way up into the $300 range. So they're moving together. Now, when we see what's happening in GameStop right now and the utilization is starting to come up, we are going to see that cost to borrow number start to come up as well. Now, again, guys, I know we're talking about some of GameStop and AMC's Ortex data right now, and this is not meant to say, oh, buy GameStop or buy AMC. This isn't what we're talking about here. We're talking about the data that we're seeing because we know that these stocks move together. So the fact that they are taking out so many of these shares on loan and aggressively increasing the overall data that we're seeing on the utilization, the shares on loan, the amount of shares that they have to sell in the open market, well, what happens next? So they have about 3 million more shares to sell on GameStop right now into the open market. And again, this is only according to the reported data. And I believe they have about 7 million shares on AMC that they can use as well. So there's a lot of shorting that could come up next week in order to kind of suppress the gamma potential of the option chain coming out. But remember, it's kind of a self-fulfilling prophecy and a little bit of a paradox that we're seeing here. We've seen this happen a couple times in the past, and we know that the market makers are utterly terrified of this gamma potential on this option chain for specifically AMC coming up next week. Now, if they start to short aggressively coming out the gate next week, well, we are going to see a little bit of a decrease in price. But if these are just short-term shorts, in order to kind of suppress that options chain on AMC, well, they're going to be taking out more shares on loan against GameStop. They're going to be taking out more shares on loan against AMC and a lot of these other stocks too. But after that next week happens, they can start to unwind those positions, meaning some of those shorts start to cover. We see the prices start to come back up. But again, it is possible that we are going to be short-term bearish. But what this does give us right here with these trends in utilization, cost to borrow on a lot of these different stocks is we're going to see the pressure get put on the shorts. Now, here's something that I want to bring up as well. Let's say that there is $100 getting bet against AMC right now in the open market. Just $100 to make these numbers simple, and we're seeing about a 1% cost to borrow. But we kind of know that there is a high potential for naked shorting going on. So let's then say that overall, looking past the reported data, that instead of $100 betting against AMC, that the reported data would potentially hypothetically be telling us there's $1,000. And remember, they're all paying that cost to borrow. So it makes the real cost to borrow from them, let's say, paying that 1% interest on $100. It should be they're paying $1, but there's actually $1,000 betting against AMC. Well, then that steps up the real cost to borrow to $10, 10%. So there's a multiple going on here. Now, if the cost to borrow starts to go up on GameStop, AMC, or any of these other stocks, the net outflow of capital from overall hedge funds that are shorting these stocks in total is going to skyrocket way higher than you would expect to see based on the reported cost of borrows that we are seeing on Ortex. The other thing that I want to point out and make sure this point gets across to the people watching this video, because I think some of the statements that I may have made, people are going to misinterpret them. When we're looking at the Ortex data and the reported data for AMC versus GameStop on the exchange reported and on the estimated level, AMC has higher short interest, and on the gamma squeeze potential, AMC has a lot higher of a risk to the market makers on the option chain right now. So I don't want anybody to think that I'm trying to push GameStop over AMC. I like both of the stocks. I think that they are both going to perform great in 2022, increasing their fundamental fundamental value. And especially with the short shorting it under fundamental value right now, I think that gives us a really, really good potential for a massive leg up. But I don't want anybody to think or really cause problems based on what I'm saying in this video. I'm just looking at the data that I'm seeing, showing you guys that both of the stocks move together, and we are seeing the data really start to come in one direction, in a very, very bullish direction for retail investors. So that is going to wrap up this update on AMC and a little bit of the data that we were looking at on GME. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.